Today we are at Jurong Lake Gardens doing interview. So we have a Miss Billion Achiever here with me.
Hello.
I think in investment forums you will see that I would say let's say 90% of the people's chatting are like males. So it's very rare to see a female that is kind of very vocal and active. So the moment I see you, I was like, okay, this lady, I must interview you someday.
Thanks. Nothing special about me actually. But interested in investment and hope that my view or my experience can help the group, and I wanted to learn more from the group also.
Do you want to give a quick introduction?
Just a bit about me. So I have my bachelor in econs and finance, also have a master in finance. So I'm very into finance, investment and numbers. Back then in university I already learned about investing, but not thought about it seriously. No plans, nothing, just knowing but not really understanding the goal in investment. The real investment only comes around 2019 when I start building up my own portfolio. And during COVID, watch a lot of YouTube and find out my own comfortable strategy and way and plans. So making a goal and then the plans and then actively fine-tuning it. I think now I'm very comfortable about where I am right now. And thanks for inviting me to the Telegram group. I think we have the same thoughts about how to invest. So yeah, happy to learn from the group.
Which investment channels that you watched during the COVID period?
The very first one I got was I went to Mr. Lu one. The one M65, because that time I was not very into CPF. He was on the newspaper, so I thought, okay, give him a chance, open mind and go in. So after listening for a while and doing my own research, I'm very, very convinced about his strategy. So for the first time, I joined the 1M65, and then after that, so I think we got to know from the same group, and then we add on to other groups and learning about other investment strategy and things. So after fulfilling my FRS, so I think it's time to do some other investments. So that's why I think it's time to venture out a bit.
My next question is, can you just walk us through your journey building up your portfolio? Because just now you mentioned that from 2019 you started up like really focusing on your portfolio, right? What has changed throughout this period?
I think in 2020, right, that's where all the hypes in tradings, like really short-term tradings, like 1 day, 2 days, 1 week, you can earn a lot. I did all these hype memes trading. Actually, I earned a lot during that period. I think in 2021, I also lost all my gains that I earned in 2020s. So my capital is untouched, which is fine. So I thought I'm a bit lost lah. So why should I be doing something? And back in that time, actually, I did put money in my SPY. And my SPY was going up steadily, and I realized that if I cannot benchmark my portfolio against SPY, then I thought, why the hard work but not earning so much, right? If I'm very that good, maybe I'm not that good. So I thought if I'm not really that good, then I should guai and do the stock index type of investment. So that's why I went back and looked into my strategy and all these plans. So I'm now very heavy into my SPY. SPY is using my OA to invest through Endowus. So in terms of my own cash investment, it's mainly into QQQM and also my Tesla. That's all I'm now investing only.
So in year 2020, that was the year where companies like GameStop and AMC just went to the sky, right? Did you ape into those stocks?
Yes, I did. So I did, and I made money, but it's not like a life-changing money. Actually, I'm quite scared. Even though I'm making money, I'm very scared, because one night you can earn like 100%, which I have never seen before. I think it's not sustainable, so I pull out way earlier, and I'm glad I didn't lose all my capital, although it's not a very significant, like people who ape in like few 100K, those type. But I think it's not sustainable, so I just sell and get whatever gains that I made from that. I mean, from advice, this is a gambling. This is not a this is not long-term investing. I don't recommend that lah. Yeah.
Okay, then come back. Speaking of long-term investing, right? You want to share with us your current strategy, your investment strategy, right?
The current investment strategy is that because I already hit my full retirement sum, my OA has been stagnant there, so that's why I'm putting every penny that I have in my OA into my SPY investment. For my stock investment, yeah, I think 50% in QQQM and 50% in Tesla. So I do a monthly DCA, yeah, into these stocks. Although if I do have some spare cash and I see the price is good, like right now is down a bit, so I put a bit more into that. So other than my monthly DCA, I slightly put a bit more. Yeah, when the price is a bit down, yeah.
So QQQM, if I recall correctly, this is it's like 100% US based and then it's very tech focused, right?
Yeah.
SPY also 100% US because it's S&P 500 and there's a lot of overlaps, right? And now you purposely buy into QQQ because you want to focus a lot more into technology, right? Why do you think that investing into tech exposure is a good idea?
I think it's a personal bias. First, maybe we talk about the broad-based US market. I still think that US is the heart is in the innovation. So the growth is there, capital is there. That means all the people, the funds goes into US to build up all the companies. All the biggest tech companies are mostly US based. Other than looking into US, I look into tech in US. From what I see, the next growth wave is mainly on tech. So the tech will lead the growth. Yes, so that's why that technology is where I am quite interested in. QQM is, I think, majority is in tech. So that's why I think this in tech itself will be the leading in tech when it comes to other indexes. That's where I have faith, and I think it's quite volatile, but it's not as volatile as others. So I have faith in it.
You do believe that for most people, let's say average investor, they should really just invest into like passive index or passive ETF, just be passive about it rather than picking stocks, right? What's your view on this?
I cannot speak on behalf of other people because every people have their own circumstances, environment, and the style. If let's say they are very good in technical analysis and they can make more than the index, hey, just go. I won't stop them. If they think that they can buy Toto and win 5 million and pick the right number, just go, right? I mean, why have to stick with my opinion and what I pick, right? I'm a very lazy investor. I don't want to crack my brain, and I just want to go on with my own life and do my own things. Don't want to crack my brain every day looking at night and having the thoughts of today my stock is going down for 10-20%. I think I'm just way past that stage that I'm very zen already. I just know that the index will do the work. You find the best stocks for me. That's why I'm very zen, and I think that if you believe that the world will still progress and will still grow, I think that the stock index will still grow with this growth and the way that you look at it. The big picture is just going upwards. That's all I can say.
At the time of the recording, right, I think stock index has dropped quite significantly. So this is a very volatile period. And regardless of whether you invest in single companies, right, or you invest in index, even for QQQM, I think also dropped more than 20%, right, from the peak. So how do you actually looking at this? Are you really also very zen about it, or what's your view?
Yeah, I'm very zen. I think I have seen those stock that last time I bought in 2021. It can drop 50%, 60%. Some stock might not be able to recover after it dropped 50, 60, but stock index is like top 100 companies, right? Especially Nasdaq or SPY 500. I mean, even if you kill 50% of the companies inside, it still can replace with another top 50 back into the index. So I don't see why it cannot recover unless the top 500 and 100 companies wipe off from the human earth. So there's nothing to get too worried about it. I'm quite zen already. I don't care whether it dropped 50 or whatever. If you cannot stomach 20-50% of risk and the drawdown, then stock investment might not be your type of investment. As long as you are invested, there is a period that you will have a drawdown. It's just a huge one, a small one, but in a long-term period, I think if you can invest in 15-20 years, definitely it can recover.
Yeah, I think for all these stocks, right, I mean, stock in market can get volatile within short period of time. So you just need to focus on the fundamental of the companies rather than the day-to-day volatility, right? If we are not comfortable, then maybe we need to manage it using our allocations. So not that every single dollar that you have has to be in stock market, right? Could be in other instruments, right?
Yeah, I totally get you. Although should not follow me lah. My 100% cash is into stocks lah. So yeah, but before that, of course, you need to get your emergency funds. Your cash flow is not too tight, and you still have your money for taipeng, and do not use your kids' education fund and all these things, and make sure your CPF is fully funded. If you still have spare cash, and just put into stocks. But that's my thing. Yeah, so I don't recommend, because everybody's risk is different. Their circumstances is different. Yeah.
What's your thought on CPF, right? Because just now you mentioned that you actually invest the OA. Maybe that's because you have already filled up your SA, right? Yeah. What's your view in terms of like allocating between CPF and also investing at your own?
Because CPF already filled up already, so nothing to be done. Every month, whatever money I get in, 100% is in invested DCA. Is a monthly DCA into my NLS funds lah. Yeah.
Just now we talked mainly about all these QQQ, mainly US stocks, right? I just want to switch back a bit, come back to Asia. Do you invest in Singapore markets and let's say or Asia stocks, right? For example, like Chinese stocks, Chinese tech. Do you invest in those companies, and why, yes or no?
I don't invest in Singapore or Asia market. For Singapore market, from what I see is that the top heavyweights companies are banks, REITs, and communications. So they are not the type of companies that I will invest. The main reason is that I'm not saying that they are not good. Okay, they are good, but in terms of growth, they are quite limited by the business they are in, especially you can see that they are very focused in Singapore or Southeast Asia or Asia in that perspective. So to grow this business, it's not that easy. There is competition in this type of environment. So the growth is not that high, especially banks, REITs, and communications is more very traditional type of industry. So the growth is not there anymore. We are not in that so-called like a population that is young and in the growth phase anymore. You look at the GDP in Singapore. That's why I didn't invest in Singapore market and full force in US market. And I'm not a dividend stock collector, so that's why I'm not. That's not my style of investing. Talking about Asia, I think a lot of people think about Hong Kong and China markets. But for me, I don't invest in China or Hong Kong markets. I didn't study it at that's first, and I think there's also a geopolitical type of a risk for me. I just wanted to avoid it lah. I'm not saying that there are no quality companies in it. Yeah,
that's right. If you are not comfortable with certain kind of risks, right, then you just avoid it, right? I think that there's nothing wrong with that, right? And also this is not like an express of saying you are bearish on them, right? You just say, okay, this is not something that I'm interested in. Then I'll just invest in something that I interest in. So in the chat groups, I noticed that we have discussed about property investment, right? So in Asian context, I think it's quite normal for people to say, okay, once you start working, you will save money to buy a house, buy properties, right? That is the standard advice, but it seems that you don't agree with such approach, right? So I just want to get your thoughts on this.
I'm not saying that property is not good. It's just, I think the timing of purchase is very important. If let's say a couple really needs it, just go and buy it. I'm not stopping them from purchasing it. My own perspective is that if a couple have the money, let's say 100k, right? Either you are thinking about to do investment or to down pay a property. I think that when you are still young, in your 20s, I think this 100k can go into the stock or stock index first, like SPY or QQQ. So you keep it there for about 10 years, right? And then if let's say that at the same time you also have another 100,000 on the side, then yeah, you can buy the property and invest at the same time. But if let's say that you only have a choice between stocks and property, I would say go stock first. Yeah, and you invest for 10 years. Let's say after 10 years with 10% return, yearly you put in 20,000. Maybe the return average about 15%. After 10 years, maybe you earn about 800k in your portfolio. Versus if let's say you down pay 100k in your property, and then after 10 years later, your 500k property becomes 600 or 700. In the end, you net out all your capital. Maybe you have about another cash back. Really on hand back, right? About 300k, but that's excluding your maintenance, your insurance, your renovation, and blah blah. But that 300k versus your portfolio, right? Maybe net after your capital, you still have 500,000. That 800k portfolio, right? After 10 years, those couple, let's say the couple did not buy the property. Actually, using that 800k, right, you can do some leverage, like collateral or whatever, right, to fund your house. So with that 800k, you can do a collateral and fund your house without using your pure cash, to save up. Then you can have your property with the funds, as well as you have your stock portfolio. Maybe another few years you guys can retire, because you can easily hit 1 million in the next few years already. You totally do not have the stress, between retirement, house, and investment. Three of them, one go, you can finish up. But if let's say you do your property first, so after you sold it, you have your 300k on hand, what you do next, right? You just have the cash. So yes, you still can purchase another one, but usually couple will upgrade to a bigger loan. So that means that you totally used up all your cash already. And the worst is that the bigger the loan you have, the more cash flow you have to flow into your property. If fortunately you have a bigger role and paycheck, then maybe in parallel you can do some investment on the side. But that means you are investing 10 years later, and not upfront. So that is a missed opportunity there. Versus the couple who already have 800k in their portfolio, you carry a bigger loan, you just start up investment, and maybe you already have a small family. So you have many stress at that time already, and most likely your cash flow is very tight because you have a family to feed. That's why my thought is that you should do the reverse. You should do the stock in test investment first, and then at the same time you try to save as much as possible and upgrade your job to get more cash flow, if you can, to save up that first deposit for your property. Do not buy a expensive big property. BTO is the way to go. To buy the cheapest possible, take all the grants that you have, and just do a minimum, because home is just a place to stay, not investment.
Yeah, so I think we also checked before, right? So there are some people that they thought that buying house is an asset, and then they just buy a house, and then after a couple of years they upgrade into another bigger house. You can see that yes, on the asset side they are asset rich, right? But actually this money cannot be easily cashed out, and they might still have a problem when they want to retire and want to spend the assets they have in the form of properties. That is very hard, right?
I think you always heard about the news about couple in their 60s and 70s, right? Have a $2-3 million house but cannot retire. Isn't it a very weird situation that you have seen? You'll be like, what? 2 million, 3 million, you cannot retire. Have you heard about 60 years old, 70 years old with a 3 million portfolio or 2 million portfolio, the same amount, right? Value in stocks, they cannot retire. You have never heard about that. Usually you'll be like, wow, you can really retire. The stock portfolio have more liquidity than the house, so that's why it's easier for these couples to manage their funds. So maybe that time, maybe 50 years back, or 40 years back, stock investment is not that popular, but now we know and we have a choice. I think people need to know how to allocate and make sure that their cash flow liquidity is there at the time that when they are retired. So either you quickly liquidate your house just before your 60s, or you really downgrade and liquid and put more money into your stocks, or some a place that where the money can flow, rather than holding a asset that's high value asset, but you cannot get cash flow in your life. Yeah.
So let's say if I have a portfolio, okay, it could be like 1 million or 2 millions, right? Okay, and let's say if I'm approaching retirement age, how do I cash out? Do I just sell the shares, or do you have any other ideas?
I also learned this from some YouTubers, right? So after learning a bit, there's two options to go lah. So I think the first option is that they so-called you collect enough of your portfolio and you have a 4% withdrawal. So you sell your portfolio bit by bit, 4% per year, and make sure that your portfolio can grow more than the 4%, so that you have some leftover each year. So that's the first options that you can do with. Another options that I learned from online is that you can use your portfolio, your stock portfolio, as so-called a collateral. So you go to the bank to collateralize your portfolio, and let's say that 2 million, and then after that you do a 4% collateral on your portfolio. So that means you do not even have to sell your stocks. You just borrow from the bank and you use that to fund your lifestyle. I think the interest now maybe between 2 to 3%. So if let's say you borrow 100,000, you just pay 2-3,000 per year to have a 100,000 type of lifestyle, and principal you don't have to pay back. But I have to emphasize, your portfolio growth have to cover everything.
Yep.
Yeah, have to cover your whatever withdrawal or whatever loan percentage you have. You cannot loan more than 20-30%, just in case of there's a downturn in your portfolio. Yeah, so that's very important. And I think before retirement, you have to schedule 2 to 3 years of your emergency funds. Just in case that the first year when you retire, you meet a situation like right now, and your portfolio down for 20-30%. So that would be quite tough if you wanted to withdraw the money, but you do not have the access fund. And if you hit your portfolio very hard, if it's a negative and you still want to take money out, you need to have your own expenses first before you take out from your portfolio. So the options too is to do a collateral to fund your lifestyle. Just pay the interest without paying the principal. Yeah, you can sustain for a very long time. If let's say that you do not even sell the stock index, it can go all the way and pass it to your kids, and they can do the same thing. Yeah. Not only that, right? If let's say that during retirement you don't have a house yet, you have a $2 million portfolio, right? You can use your portfolio to collateral maybe a 20%, right? A 400,000. Maybe you can buy a $1.6 million house, And then after that, you just pay accordingly. And if let's say you're still working, you still can pay it. If not, you can rent it out. So other than your own portfolio, you can have a house for almost free, because you get the funds from your bank, and you do not have to save that down deposit. So it's a free house with a free asset. So that's why I say have your stock portfolio first, and you have a free house when you collected enough portfolio in your house. You don't have to rush to get your house. Property, if let's say you really need it, just buy it, but do not view it as an investment that you can earn a lot of money out of it. If let's say you want to buy a property for investment, like just any of the business, if you want to have a second or third property, you have to time when is the best price to buy and when's the best time to sell, and have to do some risk assessment as well as the financial cash flow to see how you fund the cash flow. Is let's say that there are some periods that you cannot cover the rental. I think for property, after certain age, right, the upkeep and maintenance is high. Especially the house is 30-50 years old. So if you pass to your descendants, right, it's also very hard for them to keep up. There's a lot of property tax, especially the house value going up. Let's say if you buy a very big house, the tax will be very high. Everybody have to maintain the house, to keep out the house. When you want to split it among the heirs, it's going to be a very bad fight in the family. But with a stock portfolio, it's very liquid. You can sell it off. You can easily just split which one get what stock, right? Just transfer the stock over to their platform. You just pay a fee, and I don't think there's a lot of problem with that. It's much easier. I'm not saying that property is not good. For me, I think if you're rich, you can stay everywhere. I would think that I would like to stay in Airbnb and some villa in Bali. Just renting and no need to worry about tax maintenance. When I'm really think that I'm very very old, I really need to have a fixed place to stay. Then I'll find a fixed place in Singapore to buy, but not here.
Yeah, come back to the retirement, right? Let's say if the market is not doing well and you can't sell your portfolio, maybe you can still go back to McDonald's and work there.
No, I think that even if the portfolio is not good, right? Like what I say, just before the retirement, you need to save up your 2 to 3 years of emergency expenses. I think there's a lot of people in the Telegram group advocate that. Yes, I definitely see why they say that, especially in this time. If this is the first year of retirement, you'll be like, what the heck, right? Yeah. 2 to 3 years of emergency fund I think is more than enough. If let's say during the first year it's still not recover, you can always go back and take up some small job. I think you still can slowly build back your first year of savings. I think 3 years the market should recover at least by a bit banner. At least there's no stress and maybe find some small job to build up the cash back again.
I think one thing I find quite interesting is that, for most people, right, they will think that buying house is something that I need, and then it is not something like a market timing, right? I don't try to time the price of the housing, but when it comes to stocks, they always are concerned about if I enter now, is it like a good time or not, right? This market timing is very important, but for you, it seems that it is the opposite. It seems that the stock market is kind of like more stable, going up because of the fundamentals, right? But for the housing, because of the leverage that we use to buy house, so sometimes you are more concerned about, like, if you want to buy house now, are you sure that now the price is good or not, right?
I think why people are so scared is because they open the app and see it every day, the price difference up or down. If let's say there's a market index, of your house, that it goes up and down, I think if you still have that type of fluctuation, it can go up, $1,000, or the next month it goes down $1,000 in your house. What do you feel? Or 10,000, Although you say, you will not have any, but if there is an index on your house, in your block, and there is an index like this, I think you get worried too. I guess it's because stock market is a very transparent. You can see everywhere and it's on the news, right? So that's why it magnified your senses. Market price is not that as transparent as we see. It's more like you buy, sell, and then you close your eyes, right? And you don't want to know about it anymore. Until that day you wanted to buy and sell again. If not, you won't open the book and look at it every day and see, is it up 1,000 or is it down 1,000, right? I think it's because of the news and the app that it gives you on, just one touch and you can see the price is up $10, 10 cents or $1. So that's why there's the emotional is there. If you think that you cannot handle it, just close the app and just go to sleep. For me, it's just buy and close the app. Just like you buy the house already, just done deal. I mean, look at the house price up or down for what? You're not selling, right? For me, same things. Stock index is like I buy already. It's like I buy a house. Just keep on buying, and I know that it will not tank unless it's World War III.
Let's come to the closing questions. So now you have some experience investing in stock markets, right? I just want to know, like, let's say if you can go back in time, talk to your 20 years old self, right? What kind of advice that you will give her?
I think that just be confident. Don't worry, everything will be okay. Every challenges you have now, right? You will pass. This shall pass. So every challenges now, like the same thing like what we see right now, right? 20 years you look back, you're like, hey, what the heck, I should buy more. So everything will be alright. So not to get too worried. I think the next thing I also want to tell myself, don't be too stubborn. Listen to people. I am a very stubborn person. I never really listen. I think that I'm always correct. I'm stubborn in that way. I think with age, we kind of open up and try to listen and understand, right? Do your own research, understand Although I still have my own bias, but yeah, try to understand more why people say such thing and find it with logic, facts. Then you realize that there are people who already have the experience out there. They're telling you something, wrong or right, understand their perspective. So at least make your own judgment. Then you learn more out of it. Whether their opinion is wrong or right, there's something to learn. If let's say I'm 20 years old, right, I think you should save more and start invest as much as possible. Yeah, I guess that when I hear this when I was 20 years old, right, I was like, hey, YOLO lah, why save so much, right? You don't even know how long you'll live. The old man's advice is still worth to hear lah. If I can go back time, I wanted to start investing at 7 years old with my ang pao money, So I thought that, why would I start so late? If not, I'll be billionaire already. But yeah, so I think I cannot turn back time. But this one, I think I can tell those who are in their 20s, start as early as possible. It's okay to make mistake. As least you learn. Last time, you're always like, I know something. I know about investing because of my bachelor, but I don't understand it. I always think that I understand it. But it's just knowing and understand this topic is not the same because you don't have a plan, you don't have a goal, you just do whatever you feel, right? Doesn't make any sense, yeah. In the end, you are nowhere and you realize that you didn't reach anywhere. So having a goal in mind is very important. In every way, we have to be kind and patient and to understand people. At the same time, be focused. Don't listen to the noise around you. Find your tribe. Especially like right now, I know that I'm a long-term investment, so that's why I want to find a group that advocate the long-term investing, like your group, long-term investing group. Yeah, so I think that then I can stay away from all the negative people who say otherwise, right? So at least I have a group, we hug together. Yeah, if the portfolio went down, we hug and sing song together, right? So we don't feel so lonely in this world anymore. I think last but not least, stay healthy. Do not think that 20 years old you'll be always healthy. I'm eating McDonald's every day. Yeah, I thought that I'm invincible, but getting older, I realized that this is not the best diet. Although I know it's not the best diet, but knowing and understanding is it's very different. Now I see a lot of my friends having some problem in their health, like heart, even some death. I'm very sad to know about all these things. I hope that it does not happen to a lot of people, but physical health is very important. Mental health also very, very important because I have a few friends who have a nervous breakdown to the point that he looked physically okay, but mentally not. Yeah, stay healthy, So I guess without the health, even you have 10 million in your portfolio, I don't think anybody will be happy. Not your family, not yourself. Yeah, money is just a number. It's not an end game that everybody have to achieve. Balance out your life, be happy and be grateful. I'm very grateful. Yeah.
Thank you so much for all the sharings. Definitely true. I totally agree with you that we really need to not just taking care of our portfolio. We need to take care of our health and also live healthily. So if you like this content, please remember to subscribe. Feel free to join our Telegram group. So Miss Billion Achiever here, she's very active in the group. I think that's all on this episode and thank you so much. See you. Bye bye.